the Trump administration has announced really big tariffs and then pulled back or implemented them for a day or two and pulled back. And so far, it sort of looks like a negotiating game. What can we get? But this is a deeper issue for the Trump administration. In the first Trump administration, there was a promise to make America great again and bring back jobs that had been lost from really 30 years, more than 30 years of free trade policy. Manufacturing plants closed and relocated, primarily in this case to Mexico, to some extent to Canada. So you've got a situation where the physical plant is gone or shut down. And, Trump did not bring back manufacturing jobs in his first term. So there seems to be a commitment to put a lot of pressure to bring those back. But it takes a very long time to build a new plant or get an old plant up and running again. And it's cost prohibitive right now and in a global market. So how they do the second part of this is the big question mark. Slapping tariffs on costs consumers money in the short run. The argument is in the long run, it'll bring back jobs to America. But there doesn't seem to be a plan to do that right now.
So that's a great question. That's a great point, because I was asking that of Hugh Johnson just a few moments ago. And I was saying, look, the move away from, say, a government support or an economy supported by fiscal spend to an economy supported by private spend, is that in general something that is realistic? And what support do you think we need to see to then help those companies and help the private money?
Well, Alex, I think you can make an argument that we could reduce the size and scope and footprint of the federal government financially, in terms of people, in terms of regulation. You can make that sound argument, and you could actually try to implement that in a way that's gradual. You can't, it's like weaning off anything else. You've got a full supply of this for so long. People are quite used to it, and they make decisions based on it. Consumers, households, businesses make decisions about the flow, continuing on the flow of federal money and free trade. So you take both of those away at the same time, I think you really bring the economy, not to a halt, but certainly do a lot of damage, not only to current spending, but future planning. And we're seeing consumer sentiment going down. We're seeing people pull back. Now, if you want to buy a new car, if these tariffs hold, then it will be more expensive. Or remind people of the supply chain issues under COVID, when cars cost anywhere from $3,000 to $6,000 more than they should have. That will slow down consumer spending. And as you say, Alex, consumer spending is still a big engine that drives the U.S. economy.